Hey everyone, AMC stock has been on a tear lately. Now, with more people getting vaccinated, more people now want to and feel safe to go watch a movie in the theater. This thinking as a reopening play, plus the increased short interest, is what's taking AMC stock on a rocket ship to the moon, with over 1000% returns since the start of this year. With all of this attention on AMC stock and the potential offering of more shares, in this video, I'll explain what's happening to AMC stock, the short squeeze, and further potential price action. But before we get into the meteoric rise of AMC, I'll really appreciate it if you could destroy the like button for the YouTube algorithm. For the low price of $0, you could help this video get pushed out to other people looking to start investing, whether in AMC or another company, by turning the like button blue. So thank you for doing that. With that said, let's get into the video. So as of Friday, May 28, AMC had a stock price of $26.12. It's over 1000% since the bottom back in January. If we look at the max chart, we see that AMC peaked out at around $35 back in 2016. So it's not completely out of the realm of possibility that AMC could blow past that previous peak and hit a new all-time high of $40 or $50 or beyond, just based on price data and the influx of new retail investors and seeing how the GameStop short squeeze shook out. Now, if you're not familiar with the GameStop short squeeze, I made a separate video discussing that in length. I linked that video down below in the description if you're interested in checking it out. So I'll start by quickly catching you up to speed with the latest short interest metrics. There are 500,000 short shares available. The short borrow fee rate is 7.74%. Also, the short volume ratio is 20.52%. The number of fails to deliver shares is just under 200,000 shares, and the ratio of institutional puts to calls is steady at 0.93. So, because of this short interest, AMC may be going through a short squeeze, or in particular, a gamma squeeze. To understand gamma, you first have to get a handle of an options delta, which is another Greek, which represents the expected change in the price of an option based on changes in the price of the underlying stock. For instance, if a call option has a delta of zero point 0.2, its price is expected to rise about 20 cents for a $1 rise in the underlying stock. An options delta will change based on how far away the stock price is from the exercise price of the option and in which direction. So the chart here shows a simple graph of what an options delta chart would look like for a long call option on a stock. Looking at the chart, option delta is a nearly flat line around zero when a stock's price is well below the option's exercise price. It is also a nearly flat line around 1 when that stock's price is well above the option's exercise price. In the middle, though, that delta chart curves upward, reaching a value of zero point 0.5 and reaching its steepest slope at exactly the option strike price. It's the slope of the options delta chart that represents the options gamma, and that slope, and thus the gamma, is at its steepest at exactly that option's exercise price. So this is similar to what we saw with GameStop. In GameStop's case, many people have long expected the company to be forced to declare bankruptcy thanks to a business model that has been largely disrupted by digital downloads of games. When they expect such bad news, investors may be tempted to borrow and short the stock. So many people have made that decision regarding GameStop that more than 100% of the company's total float have been sold short at one point. That increased percentage in total float is what we saw with AMC back in January, where the price skyrocketed over 700% in only a couple of weeks. And it's what we're seeing now with AMC's total float increasing now. Because of this recent uptick in the short interest for AMC, we're seeing Google trends for AMC now higher than GameStop. Also, AMC's trend is still rising, so it may be the case where AMC gains more awareness leading up to the short squeeze, like what we saw with GameStop earlier this year. Interestingly, AMC is now also trending more than Dogecoin and Tesla on Google Trends. AMC is also trending on Reddit and Twitter, with AMC being the most discussed stock on both platforms last week. So it'll be interesting to see how long AMC will continue trending. Now, one great trend to be a part of that isn't listed here is to destroy the like button for the YouTube algorithm. For every like button you turn blue, you're helping to increase the value of this video by having it be recommended to others. So thank you for doing that. With that said, let's get back into the video. So now, according to CNBC, More than 650 million AMC shares changed hands on Friday, far surpassing its 30-day trading volume average of 106 million. AMC was the most active stock on the New York Stock Exchange by far on Thursday, with nearly 700 million shares changed hands. The stock recorded its highest trading volume of 1.25 billion shares on January 27. The movie theater chain has replaced GameStop as the most popular stock in the infamous Wall Street Bets Reddit forum, according to Bank of America's analysis of stock mentions on the chat page. This can be confirmed since we compared the Google trends of AMC versus GameStop. Investors shorting the meme stock of AMC are estimated to have lost $1.2 billion over the last week. With 450 million shares outstanding, the entire company changed hands nearly 1.5 times during Friday's trading. The so called short covering could be contributed to AMC's massive rally this week. The company has about 20% of its outstanding shares sold short, compared with an average of 5% short interest in a typical US stock, S3 Partners said. AMC's new retail investors, who stand at 3.2 million strong, owned about 80% of the company's 450 million outstanding shares as of March 11, AMC reported earlier this month. Their efforts, which surged back in January, pushed the stock up to $20 a share, up from $5, and allowed AMC to lighten its debt load by around 600 million. The more than 1100% jump in AMC stock since January has defied Wall Street analyst predictions. AMC's business has been under extreme duress. It has around $5 billion in debt and needed to defer 450 million in lease repayments as its revenue largely dried up during the ongoing coronavirus pandemic. Theaters were closed for several months to help stop the spread of the virus, and when the company reopened its doors, few customers felt comfortable attending screenings, and movie studios held back new releases. Now, Forbes also wrote an article on AMC saying it's set up for a short squeeze. According to Ihor at S3 Partners, who measures short interest, it's been a brutal week for shorts. For the week, Ihor estimates that shorts lost over $1.2 billion since the beginning of the year and have lost over $1.9 billion. Ihor estimates that 89.6 million shares are shorted, or 20% of the 448 million shares. As the chart shows, the number of shares being shorted fell significantly in late January, which is the gold line, when the stock had its initial pop due to the Wall Street Bets Reddit crowd jumping in. As AMC stock price came back down, the number of shares shorted steadily increased until mid April, where it had essentially remained around 90 million. Eeyore has developed a short squeeze score and ranks AMC's metric a 10 out of 10 for a short squeeze. He wrote, security is considered crowded on the short side if some or all of the following occur. There is an amount of dollars at risk on the short side. There's a large proportion of a security's tradable float shorted. There's a scarcity of stock loan supply. And there's limited daily trading volume. However, even when these criteria are met, does not mean the stock is a short squeeze candidate. He added, while a stock can be crowded, it might not necessarily be a short squeeze candidate. He continued, a short position, no matter how crowded, that continues to be profitable cannot be squeezed. No trader will be forced to exit a position that continues to be profitable. Mark-to-market losses are the primary impetus for a short squeeze to occur, and AMC's recent rally has pushed it into potential short squeeze territory. With the huge spike in AMC shares, they are definitely in overbought territory. Uh, in the previous chart was the stock's RSI. When it gets above 70 and it's currently at 86.81, they are overbought. It would not be surprising to see them pull back in the short term, similar to what happened in early February. Now, one way to play this is to hit the subscribe button and bell icon to get notified when my videos get uploaded. It's completely free to subscribe and hit the bell, and each subscribe and bell you click directly helps each video get watched more. So thank you for doing that. With that said, let's get back into the video. Now, another portion of the AMC situation is what's known as synthetic stock. Essentially, it's an option strategy that is equivalent to the underlying stock. So a long call and a short put is synthetic long stock. A long put and a short call is synthetic short stock. The Motley Fool mentioned AMC's synthetic shares, saying that in spite of retail investors professing their love for AMC on social media, believing they've saved the company from hedge funds looking to bankrupt it, they might ultimately be the catalyst that leads to AMC's demise. Back in March, AMC filed a proxy statement with the SEC that proposed a number of questions to its shareholders. Among these proposals was an item designed to increase the company's authorized outstanding shares count by 500 million to just over 1 billion. This doesn't mean AMC would issue 500 million shares, but it would have given the company the authority to do so. As the May 4 annual meeting drew closer, many retail investors banded together to oppose the measure. The belief was that doubling the outstanding share count would quell any chance of a sustainable short squeeze. Rather than proceed to the annual shareholder meeting to count the votes, CEO Adam Aaron capitulated to retail investors in early May. To allow for additional time for its millions of current individual shareholders to have their voices heard, the company said AMC pushed its record date for the next proxy statement to June 2, moved the annual shareholder meeting back to July 29, and announced an at the market or ATM offering of 43 million shares to raise capital. So this sounds pretty harmless, right? Well, see, here's the thing. When AMC pushed back its shareholder meeting and set a record date of June 2, it effectively promised to get its retail investors who are obsessed with a short squeeze an updated share count by that June 2 date. This meant quickly executing its 43 million share ATM offering. This offering ultimately raised $428 million dollars with an average price per sold share of $9.94. Since this offering was completed, AMC's share price has skyrocketed. On May 27, shares closed at $26.52. This means that expediting the ATM offering because of the moved annual shareholder meeting cost it about $713 million dollars in additional capital that it could have been raised. And there's more. Because AMC used up its last remaining available shares via the ATM offering, management has no way to take advantage of this mega spike in the company's share price to raise money. If the May 4 vote had taken place and the outstanding share increase had passed, AMC could be raising billions in capital right now to ensure that bankruptcy is off the table for good. However, the short sighted greed of all retail investors to see a short squeeze through might effectively doomed AMC for good. Even with the $428 million dollars the company raised, AMC's rough $1.2 billion dollars in cash might only be able to sustain the company through the end of 2022. Even if AMC returns to its pre pandemic operating performance, its interest expense, deferred rent obligations, and leverage are so much higher than they were 2 years ago that it has virtually no shot of meeting its debt obligations by or before 2026. The author believes Aaron's capitulation to retail investors might be what sends AMC into bankruptcy within the next 5 years. Now, just as a price comparison, right now AMC is worth around 11 to 12 billion dollars. If it were to hit $50 per share, then AMC would be worth $25 billion dollars at the current number of shares. For comparison, at $50 per share, AMC would be worth more than Canon and about as much as Cloudflare, LG Electronics, Slack, and SiriusXM. Now, I'm not saying that AMC could not be worth that much. In fact, although I don't own any AMC, I'm hoping that it has the short squeeze and skyrocket to $50 and beyond to show what happens when you short a beloved stock like AMC. So, a great way to get started with investing in AMC is to get two free stocks valued up to $1,850 when you use my Webull link down below and deposit $100 in your Webull account. Also, if you're interested in buying Bitcoin and earning interest on your crypto, sign up using my BlockFi link down below and you'll get up to $250 as a crypto bonus. So I hope you got a lot of value from this video and learned about the AMC short squeeze. If you found this video helpful, be sure to hit the like button, subscribe for more investing and personal finance content, and hit the bell to get notified when my videos get uploaded. Also, comment down below anything else you want to see and learn. And follow me on my socials to get even more investing and personal finance content. With that said, thanks for watching. Take care.